What's up, guys? Welcome back. I'm going to go through my entire dividend portfolio today. Right now, about 19 stocks inside that portfolio. To be honest, I'm looking to get it down to about 15. So in this video, I want to go through all the different stocks that I've purchased over the last couple months. I want to go through the ones I'm thinking about selling and getting rid of and why. Also get your feedback and opinion on the portfolio and see what we're doing moving into the next couple months. I've seen other videos like this, guys, drag on for a very long time. I'm going to be quick and to the point so you can see exactly what I own, exactly what my opinion is, and we'll get through this quickly. Now we're going to do this on the Robinhood desktop, guys. I can't use the app because you guys know I have an iPhone 5S, so I can't record videos on my phone and do it all nice and neat on the side. So we're going to use the desktop version right now. Here we see it valued at about $10,000, $10,794, which is pretty awesome. Today so far, the market's just open. It is 10:22 in the morning today, the day that this video is being released. All right, over the last week, things are good, up 2%. Last month, 6.19%, pretty happy with that. And 3 months since I started the portfolio, I'm up about 6.31%, and that does not include the premiums that I've made for my options call. So we know that it dove down in March. I pretty much got in right at the bottom of that dip with everything that's going on. So I think that's kind of the reason why a dividend portfolio, which really isn't supposed to really grow that much, pretty much trades pretty flat, is up that much. So super happy with what's going on right now. First, my options trades that I have going on with my wheel strategy. I have 3 covered calls going on right now. Aflac at a strike of $36.50. My basis on that is $34. AT&T, $30.50. My basis there is at just over $29. The only put that I have here, which is a cash covered put, not a naked put, is for Budweiser. They give an awesome premium, and I have that down at $52.50. And then Wells Fargo, the horse at the back of the pack, Wells Fargo just dragged me down, but I am getting small premiums on that every single week. Let me see what I got that for. This week. I got $17 for that premium, so I'm pretty happy with that. Can't really complain. And those are the options that I traded this week inside the dividend portfolio. Okay, so let's go right down the line, guys. We'll start with Aflac. I own 100 shares. Right now, that basis listed here at $36. If you see my previous videos, that's not actually my basis because when I do sell covered calls and when I do sell cash covered puts, I do consider that premium to lower my basis. That's why my basis is still a little bit lower. As you can see, the total return is at 0.72. So once again, trading pretty flat. I really can't complain about that. I really like Aflac for a long term. I think it can grow a little bit. Right now, the dividend on it is 3.14, which is right there where I need it to be. The PE ratio is still undervalued a little bit at 8.77. I really like Aflac. I've liked having it. It's not going anywhere in my portfolio. I'm going to continue to trade options on it. The premiums are awesome, and that's why I continue to hold Aflac, and that's why I wanted to get 100 shares of it. It really only cost me $3,500 to really get into the options at that time, so it's gone up a little bit. AT&T, guys, also have 100 shares of that. My total return on that is right here at 0.38. Once again, trading flat, not going up or not going down. We don't tend to see a lot of growth inside the dividend portfolio, which is fine on the capital gain side, but I am selling covered calls with it often. The P ratio valued just under the S&P 500 right now at 18.35, but an amazing dividend yield. It is known for its amazing dividend yield, and I think with the 5G coming out and all the other things it's doing, it's managing debt very, very well. I've talked about AT&T at length about how I'm not worried about their debt, how they're doing the right things, and if they continue to do the right things to get rid of those debt, I really think that this is really at the top for dividend stocks. It's a powerful dividend stock, and like I said, with that high dividend yield, right now, I don't know if it can really be beat. It's one of the top dividend stocks that I recommend and that I own. Now, Budweiser is one of my biggest gainers. It's up 25% for me over the last 3 months since I purchased it. But I have to be honest, this is one of the ones that I think that I might cut from the dividend portfolio. And here's why. Even with the big gains that it had, over the last year to 5 years, guys, it's still been on a pretty big downward trend. Right now, all it's doing is really recovering after the major dip that we had in March. So we dipped down and now it's slowly starting to recover back up. The reason that I'm thinking about getting this out of the dividend portfolio, as you guys know, I really consider the benchmark for a dividend stock to be 2%. And this is at 1.94. So does that mean that I will not hold a stock that's under 2%? No, there's another one inside my portfolio I'm going to show you here that I love to hold that's under 2%. But if it's under 2%, we have to have some of that gray area where it's like dividend growth, right? This is not a dividend growth. It doesn't grow. So if it doesn't grow and it has a crappy yield as far as I'm concerned, even at the low PE, I kind of bought this out of like a FOMO. Like, I like to drink beer. I love Budweiser, but I know it's a great company, but thinking long-term inside a dividend portfolio, I just don't know if Budweiser has a place inside a dividend portfolio if it's not going to grow. I would love to hear your opinions. Tell me what you think about Budweiser. Am I right? Should I get rid of this one? I could use that money right now. The equity that I have inside this, I could probably use to put towards a better dividend paying stock or something with a lower yield that is going to grow, right? Nobody doesn't buy Apple because of its small yield, because Apple grows and grows and grows. And like I said, we'll get to a stock in my portfolio under 2% that I'm keeping because it grows. The next stock I have on my portfolio is Wells Fargo, guys. I am down a bunch on Wells Fargo, and this is listed at 5.83. It's actually a lot more than that. Because this is in the wheel strategy, I've sold it off, and then I've bought it back, and I've sold cash covered puts on it and wheels on it. So the basis for this is actually closer to like $30 for me, not 26. But like I said, this is something I can hold. I know that they're just getting kicked in the pants right now. Not only are they a bank stock getting kicked in the pants, but they're Wells Fargo, who got themselves in a little bit of trouble. But like I said, I think I can recover at least back to zero. But I got to be honest, when I get my basis and my losses on this back to zero, Wells Fargo is probably a bank stock that I'm going to look to cut. I'm not going to do it yet because I'm not going to take a loss, but definitely one of the stocks that I'm going to get rid of and probably put it into one of my other bank stocks or something else that I'm looking at my watch list, right? So let me know. I know that you'll probably light me up for Wells Fargo. Like I said, I've been in it for a while. It's gone down. It is what it is. But I am a buy and hold kind of guy, so I will wait for it to climb back up. When I get back to zero, I'm going to reevaluate on it. They also just cut their dividend, which makes it even worse. And I want to show you something really quick here. Guys, right now, Robinhood has their dividend yield listed at 8.42. That is not true, guys. And I just want to show you this because whenever you're looking up different data on stocks, make sure you cross-reference among a bunch of different websites. Don't just look at this as gospel, but I don't know, Wells Fargo, they all can't be pretty roses. Some of them have to be thorns, I guess. Moving down the list, guys, Realty Income. I got to be a fanboy. I got to jump on the bandwagon. This really is my favorite stock inside my portfolio, guys. It's up 8%. It pays a monthly dividend. Its dividend yield is pretty good at 4.46. Guys, payout ratios, if you don't know this, you can't look at payout ratios for REITs, right? We have to look at FFO. So I'm not really worried about that. I don't even look at price to earnings ratios when I look at REITs. But I also will tell you guys, I just bought $250 more of it, right? I just added 4.23. This is going to be something that I'm adding, and it's probably going to be the next stock that I try and get to 100 shares of. The reason that it's like hard to do so, and I was talking with Bruce Wang, he loves this stock as well, and he also sells covered calls. And the problem is, if we look at the options chain for this, their expiration dates are only monthly, which is kind of like crappy when doing the wheel. But it's like give and take. We have such a really good stock, right? Which is paying monthly, which is a dividend aristocrat, which is not going anywhere. They're doing well in these low times. They're getting their rent paid. But if I want to use them to sell covered calls and get the premiums, it's tough. I don't know. Maybe I just get to 100 shares and I don't sell options, or I do the monthly. I'm not sure. But it's still like one of my favorite stocks right now, up 9%. It's about 3.2% of my portfolio. I really have nothing bad to say about Realty Income. If you do, like, it was featured in my best of monthly paying dividend stock videos. I'll link that at the end. You could see I'll go in depth about Realty Income, but I freaking love it. Pfizer is what it is, guys. It's been trading pretty flat, like I said, over the last 3 months, up 1.61%. Right now for me, it is up almost 7% total. I've gotten a little bit of gain. The dividend yield, 3.91, great dividend yield, pretty good PE ratio. I like Pfizer. I've gone in depth, more in depth. You can go back and look at old videos. But I'll be looking to add more Pfizer over time. I think they're a good company, especially with how much we depend on drugs here in the United States of America. I don't think they're a company that we really need to worry about. They have great patents. They have awesome brands coming out in the future, even when they lose patents and they lose to other generic companies. Pfizer's a good one to have in there. I think it's a very, very strong dividend paying stock. AbbVie's another favorite talked about stock among the internet as far as dividend paying. said their number one drug, Humira, is going off patent pending here in the United States. It's done so in Europe. They're going to lose some money. We've talked about AbbVie before on the channel. I think it's going to be okay. They have some other things. They've acquired some other companies. It's going to be okay with them. They're going to be somebody that I'm going to be adding more of. Definitely. They pay a pretty good dividend. Right now, their dividend at just under 5%. P ratio right there, pretty much with the S&P 500. Gain about 2% for me total. Over the last 3 months, they are up 7%. A great dividend stock. Morningstar has their fair value at $97, which is just under their current share price of $92. Take that for what it's worth. It's just Morningstar. They have come in above their estimated earnings over the last 2 quarters. The last purchase I made of them was back in June. Full disclosure, guys, I'm on summer break. I'm a teacher. I haven't gotten paid. So my dividend portfolio has only been growing due to premiums. Once I go back to work, I'll be looking to put between $2,000 and $5,000 a month in the portfolio. So if you really want to see it grow, I just got to get back to work in September. Consider subscribing and you'll see it grow a lot more. But I haven't made a buy right now since June. Pretty much since last time I got paid before I went on summer break. And it's not something that I want to put my premiums into just yet, but AbbVie's going to grow. I'm going to purchase more and I will get my shares up in AbbVie. Verizon over the last month, it's up almost 4% for me, 1.2. Just like most of my dividend stocks, it's trading pretty flat, but I love them. And this is, you're allowed to own both. I just made a Coke and Pepsi video and I made it quite clear, guys. Investing is not a competition. It's not AT&T versus Verizon. You can own both. You can own Apple and Microsoft. I do, right? So this is something that complements AT&T very well. It has a great dividend yield, 4.25. P ratio is low. Like I said, they're not going anywhere. They're definitely a hold company. Morningstar has their fair value at $59, so we're pretty much right there. Rebounding to Q1, Q2. We'll see what happens in Q3 with everything that's going on. And my most recent purchase was on August 4th. So I just made a little bit more. I put $7 in there, and that was pretty much just to round it out and get an even number of shares to 2. I had like 1 and change, so I put a little money in. I've been doing that. I'm a little OCD when it comes to like looking at fractional shares. So you'll see in my portfolio, I've been just trying to round up to get an even amount of shares. One of the bank stocks I was talking before when I was talking about getting rid of Wells Fargo, I would definitely consider putting them in JPMorgan Chase. Over the last 3 months, up almost 6% for me, up about 1.77%, just about 2% of my portfolio. Morningstar has its fair value at $111. It's also been coming in above earnings. On August 1st, I received a dividend for them, and I first bought in mid-June and July, so I'm going to be looking to add more to JPMorgan Chase as I move forward. And like I said, if I break even on Wells Fargo, most of that money that I've invested in Wells Fargo is going to come out of Wells Fargo and go into JPMorgan Chase. National Grid, guys, is a local utilities. I am a huge fan of utilities. I wanted to do the local one. I know National Grid's a great company, trading pretty flat over the last 3 months. They do the same thing. Everyone's just kind of rebounding off of that major dip that we had back in March. They pay biannually on their dividend, which is kind of crappy, but it's okay. 5% P ratio, a little bit overvalued, but I think that's okay. Speaking of utilities, this one's a powerhouse, guys. Duke Energy. One of my favorite utilities, if not my favorite utility. They're awesome. They just raised up their dividend again, a great stock. Over the last 3 months, trading at about 4%, okay? 2% for me, I'll take it. Just under 5%, a smaller P ratio than the National Grid that I have. Because if you're looking for a nice, strong, powerful, long-term buy and hold utility, definitely think you should look into Duke Energy. Do your own research. Of course, don't take what I'm saying as gospel, but Duke Energy, I will definitely be investing more money into Duke Energy as the year goes on. Starbucks, which was probably another impulse buy when I had it, when I was first adding stocks. I was adding stocks that I use on a regular basis. Sorry, Graham. Yes, I go to Starbucks. I like Starbucks. Over the last 3 months, it's trading definitely flat. And this is a reason why I think that Starbucks might get the boot for me as well. When I talk about trying to go from 19 down to 15, this is one of those stocks with Budweiser that might make the cut for me. Right now, trading at 2.12, which is kind of like right there at my threshold of 2, an insane P ratio listed right here at 68, so pretty overvalued. I wonder what markets are. It has them listed at $86, so they're still under for that. They're right at their earnings. I've tried selling a couple different options with them. I got some dividends. I'm not sure where I stand with Starbucks. If I am going to make a cut, Starbucks and Budweiser might be one of the ones that I cut down to, which will get me 17, closer to that 15. But at that 2%, like I said, I want to see some growth. Over the last year, they're down almost 20%. A lot of stocks are down, but a lot of them are recovering. And this one isn't really recovering the way I want it to. I'd love to know your opinion about Starbucks here, guys. Leave them in the comments below. Should this go with Budweiser, or should I hold it out a little longer and see what Starbucks is going to do in the future? To save time, guys, I'll skip over Pepsi. I just did a video about how I love Pepsi. I got one share of it. I'm definitely going to be adding more. I freaking love Pepsi. I love Coke too, but I love Pepsi. You can go back and look at that Pepsi Coke video if you really want an in-depth one. I just made that video. Home Depot's making a tear over the last 3 months. I love it. Right now, for me, it's up 12%. Probably one of my biggest returners. It is a high value stock coming in right now at $268. So it's a small percent of my portfolio, something I will definitely be adding to. Right now at 2.14, here's an example of what I'm talking about when I say, like, if it's at 2%, I better see some growth. And this is a prime example of how I'm okay with Home Depot being at 2.14%. They're up 30% for the year, 5 years, 128. So this is getting into that area where they are a kind of a dividend growth stock. They're doing a combination of both. They can have a little bit smaller yield because their growth is going to be good. That's why I love Home Depot, and I'm definitely going to be adding to it in the near future. Waste Management is more of the same. In the last 3 months, up almost 10%. 11.5% for me, 1.94 dividend yield. So I don't know if this is considered a dividend stock. Is this a dividend growth stock? I hate micromanaging what we call these stocks and giving them all these fancy names. I'd rather just call them growth or dividend, but I do see where they can kind of blend. And Waste Management is another one where I probably will continue to add to it in the dividend portfolio, even though the dividend yield is low. It's been coming in above earnings now for a while. Good dividend. I last bought it in May. I haven't really touched it since then, but now that I'm going to start making some income again, getting back to work, Waste Management, even with the small dividend yield, I'll probably add more to it. Getting towards the bottom of the list here, Caterpillar, guys, up 23%. Another huge gainer for me, guys. I haven't added to them in a while. Small dividend at 3.13. But guys, this is a great dividend stock. Even at 3.13, I'm going to call this a dividend stock, and it is growing as well. Kimberly-Clark is on my list of buy and hold stocks forever. I don't think Kimberly-Clark, their product line is just so huge. Small dividend yield, 2.69%. P ratio right there at the S&P 500. Right now, I just own one share of them. I want to get in on them. I like it. Over the last 3 months, they are up almost 14%, almost 12% for me. Like I said, Kimberly-Clark, guys, it's a buy and hold stock. It's a stock and a company that will be around for a very long time. Johnson & Johnson, guys, needs no introduction. If you've ever watched a dividend stock video, Johnson & Johnson speaks for itself, kind of like Kimberly-Clark does. And 3M, another great stock, another stock that I've added to recently. Over the last 3 months, up 6%. Same pretty much. I've had them for about 3 months. Right now, they are coming in. I just bought more this week, $125. The mask thing and they do more than just Post-its, guys. 3M is a great company. And not to say they're benefiting off our current situation, but they are definitely a pivotal company that's helping us in our current situation. And I don't think this is going to go away in the next couple of months to a year. So 3M is definitely something that, like I said, that I added to this week, and then I'm going to be adding to more in the near future. If you've been watching my videos for a while, you know that I used to have Disney inside my growth portfolio. I did not sell them off and get out of them completely. When they cut their dividend, I moved them over to my growth portfolio, and good thing I did, they just shot up, which is awesome. But I still own Disney, just not in my portfolio anymore. So that's it, guys. 19 stocks here. I want to get down to 15. Budweiser is probably going to go on the chopping block, as well as Starbucks. What other two would you put on the chopping block and get rid of? And what is a dividend stock that I am missing from my portfolio if I should maybe go up to 20 instead of down to 15? I'll leave a playlist of that entire dividend portfolio from start to finish right here. And down here, I'll leave a playlist of the wheel strategy so you can see what I'm doing, collecting premiums with my covered calls and cash covered puts. And until I see you guys on the next one, stay positive, work really, really hard, always be kind to other people. Hope you have yourself an amazing day and an even better tomorrow.